Now, 100% in 12 months is not only not guaranteed, but it's probably because there was a tailwind and it did. Because if I knew it was going to do 100%, I would have gone to Ladbrokes and got 10,000 to 1 odds. I would have bought it myself. I didn't buy it because I can't buy everything. It was on our filtered list. He picked it. It did rather well. And after 12 months, sold it. Okay, he did well that year with Crocs, with Etsy, Medifast, and crude oil. 2024, how did this approach do? Well, the market did well. I didn't make the money. These were the big ones that made the money for us. But the market had a massive tailwind, a lot of stocks that went up. The market did it for us. Okay. 2022, we got 0%. 2023, not to be ever repeated again, I expect. It was the market which did 80% for us out of the picks that we had. Okay, these weren't the only picks, there were others, but these are the ones. Sorry, I'm not showing all the picks. I'm showing some of the picks, but overall, all the picks generated 80% in total, if you see what I mean. Because you might look at this and go, hang on, that's over 80% if you take those. Yes, but there were some which did less than 80, and that's why the number comes to 80. That will never happen again. Just assume it will never happen again. And the past is no guarantee of the future. Did we get lucky? Well, yeah, the world got lucky of 2023. Will it happen again? No, just assume it won't. I'd rather you assumed it won't, because if I could get 80% a year, I'd be bloody happy. Because in 2022, we got 0%. Just so you know. How did we know to go into cash? This happened. That's it. Very simple. Not narrative, not trying to predict the future, not trying to use my master's degree in politics and economics and shoving a bit of philosophy in there and a degree in bloody law as well. Utterly useless. All of those useless for this. It was this. That's what was useful. Although I did discover this when I was at university, because when I finished the degree, I spent the summer reading at the Bodleian, and one of the books that I read I came across this, and then that was it. I was addicted. 1995, summer of June or May, whenever the exams finished. I think they finish in May. It's been that bloody long. Oh my God, 30 years ago. And that was it. And I've written about it in the books and still use it when I'm on TV. That's all I did. Nothing, it's not guaranteed to work, but it was good enough. Good enough will get you enough. Option 2, model portfolios. In other words, this. You want a portfolio which enough data, at least one bear market, preferably 10 years of data, but at least one bear market. And these are the numbers. What's the average annualized return over that period? What's the risk? More importantly, what's the drawdown? Not guaranteed to repeat itself, but you need at least one bear market within there, like 2022, incorporated in, and you work on the assumption you didn't get out of that bear market. You took that hit, you took that whack, and you were underwater and you had the drawdown. So in other words, you take your portfolio and you put it through a crisis situation. You stress test it of a shitty market like 2022, and you say, assume I didn't get out. What does it look like? Even if I go through the crap, does it still give me great returns? And for me, that's fine. Okay. That's the closest we've got to our rocket, which is closest to 30% we've got to. Certainly hit the drawdown of under 10%, but we couldn't quite get it to 30. No guarantee of the future. I wish it was guaranteed in the future, because then wouldn't that be wonderful? It just, all you've got to do is you just got to wait and hold on to it. Okay. That's where it is. I've got questions. Which book? I'm going to give you the book now. I'll put it in the files. There you go. Investing Unplugged. I've got 18 books. They're all on Amazon, but there's one you can download straight away. I put it on the sharing. You can also go here. Go here for the books. There you go. The books are there. Of the 18, there's a few. I'm not going to go into how they destroy your money, because I think most of you know how fund managers, through their fees and everything else, destroy your money. And don't fall for this crap. That is a marketing gimmick, and I can't believe they do it, because despite all of that, they do that shit return. Okay. Your job, my job, everyone's job is this bit, is to get to this. Unfortunately, to get to that and you've got to go through those years. See, the return's the same, which is 5% more than the index tracker. That's all, just 5% more. Let's say you only did the index tracker, fine. But the return's the same each year, but it only gets exponential up here. Why don't people do that? Why don't people do that? Very simple, because for the first 7 years, they have to sacrifice a lot in order to get their jam later here. Okay? Buffett's at this end. He goes vertical because he's been doing it long enough. I'm getting closer and closer to vertical as I get older. The irony of it. Youth is wasted on the young, as they say. Okay,